Hello and welcome to another part of Investing for Generations. And after I talked about a lot of maybe not so known stocks in the past, today I will analyze a stock of one of the biggest brands in the world. So let's start. But before we start, don't forget to subscribe, like, share, and comment. Thank you. Today I want to talk about the Walt Disney Company. I want to make a stock analysis, look into the financials, and I will explain why I think Walt Disney is a buy right now and why this hit by the pandemic will not last forever and Walt Disney will just come back to the very good path they was even before, and they will be even better and bigger. The Walt Disney Company was founded in 1923 by Walt Disney, a very famous Walt Disney, and it's one of the world's largest media and entertainment companies right now with over 200,000 employees and almost 70 billion revenue every year. And as you can see here, the Walt Disney Company is not just the movies, it's not just the resorts, it's so much more. And they have four main units. It's media networks, it's parks and resorts, it's studio entertainment, consumer products, and the part interactive. And this view is without Disney Plus, which was launched just now 5 months ago. And I will say a little bit more about Disney Plus in a moment because this could be just the next big thing for Disney. But as we also can see when we look at the units and as we look at all the ways the Walt Disney Company earns money, we also see that of course this company is very hard hit by the pandemic, but they even then they earn money from so much more things. And also Walt Disney have a super strong brand, and just with this brand you can earn so much money. I'm very sure there are almost nobody in the world who don't know Walt Disney. And if you have kids, you know how strong this brand is and also how expensive this brand can be. Just to put it in relation, as we can see here, the Walt Disney Company is number 14 of the world's strongest brands. And yeah, it's just next to BMW and Cisco. So this brand is really, really big and strong. And as I said, just a brand earn a lot of money. And just to this all conglomerate, now also there's Disney Plus, which was launched just 5 months ago and has already over 50 million subscribers. And this could be a game changer and could have a big impact on the path of Disney Plus. And I will talk a little bit more about this in a few moments when I talk about the financials. So let's go and take a deeper look into the financial numbers, and then we will see how deep could be the impact also of Disney Plus. So let's start with the dividend. In normal times there is a not very high dividend, but a very growing dividend of 1.52%. It's growing 8.88% in the last 5 years, and it grows for the last 10 years. But right now, with the global situation, Walt Disney Company decided to suspend the dividend for the first 6 months of 2020. And so, there will be no dividend now in July, but I'm very sure they will come back with a dividend as soon as possible. So I'm not very worried about that. Then we took a look at the revenue, and this is just before the pandemic, and we can see that the revenue, even without Disney Plus, just rises, and this looks very good and very nice for a long-term investor. So Disney is just a growing company, always. And as I said, to this revenue, there will be also the revenue of Disney Plus, and we will take a look in that, and we will also take a look in the estimated numbers for Disney Plus. As I said before, Disney Plus reached almost no or over 50 million subscribers already. And just to take this in a perspective, the most recent number of over 50 million subscribers, showing just 5 months of growth since November, and is equivalent to what took 7 years for Netflix. And it looks like the growing of Disney Plus is almost indefinite. Um, so they say it could be over 2 million subscribers by 2025. But what impact does really have on the numbers, on the revenue of Disney? We will take a look into that also. In an article of the Forbes magazine, they just took a look on the impact of Disney Plus, and right now, the nearly yearly revenue of Disney Plus is around 3.7 billion, which is not so much when we remember the very high revenue of 70 billion. Of course, this stake is not very much and has not a lot of impact. But if Disney Plus really reached the 200 million subscriber, or even nearly that, then also the Forbes magazine come to the conclusion that Disney Plus have the potential of 30 billion revenue. And this was really just insane because this is almost half of the revenue all the Disney conglomerate just made now. And this would be a really, really game changer. And just to put this in perspective, Netflix, the biggest online platform right now, has 20 billion of revenue. So let's see how this works out, but this looks very, very, very good. And just as a plus to this very good company, even without Disney Plus. And then I also want to take a look at the margins of Disney. And yeah, before 2020 and the problems we have now, the margins are really high and stable, and that's nice. I like that, and I'm very sure it will come back sooner or later. Hopefully sooner, because this would be, besides of Disney, just better for the whole world. Then also take a look at the balance sheet, and what the Walt Disney Company has a very solid balance sheet with a debt equity ratio of only 0.54 and an assets liability ratio of 1.85. Both is really, really good. So this company is far from going into financial trouble, even if this are really, really bad times and very heavy times right now. Then just take a short look at the management. The new CEO of the Walt Disney Company is Bob Chapek, and he just took over in February 2020. But he is nearly 3 decades at Walt Disney, so very long time into the company. And it's incredible. The Walt Disney Company, with almost 100 years of history, had only 7 CEOs in this time. And I really like that because this is so stable, and this just is a sign of a very, very good company. Then next, take a look at the price and see if the Walt Disney Company is a buy right now, or even better, why it is a buy right now. My intrinsic value, and this is very conservative, of the Walt Disney Company is 130. The current price is at 115, so we have a margin of safety of around 14%. And I bought my shares at the 17th of April for $101, a little bit over that. And so I'm up around 15% right now. And as I said, I think if the world goes back to normal, Walt Disney will go back to normal, plus the Disney Plus revenues and earnings. And so I think the intrinsic value I calculate here is really, really conservative. So I guess right now we have the chance to buy one of the best brands, one of the strongest brands in the world for a very, very cheap price. And if the price dips under 100, very sure I will add to my shares because I think it's really a chance right now, uh, at least in the long term. Because of course, in the short term, nobody knows what happened to the global situation. But in the long run, um, yeah, in every case, Walt Disney should go out this very strong and maybe even stronger as before, and then we will see way higher stock prices than right now. And Walt Disney is also a good example um, why the stock market is maybe not so overvalued as it seems on the first look. So what's my conclusion then? My conclusion is that we have the Walt Disney Company under intrinsic value. Not as much as I like to buy companies, but it's really rare to buy a big, strong brand like that under the intrinsic value, so I guess that's a chance. They have a very solid balance sheet and normally, in normal times, also very high margins. And as I said, I'm very sure they will come back to that. Not this year, maybe not next year, but in 2, 3, 4, or 5 years, I'm very sure they are back to normal and they will earn money and they will earn money even more as before. Um, of course, the uncertain situation is a problem, but I guess it's just in the short run. And if I talk about the short run, it's 1, maybe 2 years. But with Walt Disney, I really think about longer terms. I think Walt Disney is a stock, is a company you want to have forever. That's a stock for eternity. I hope you enjoyed the video and got some informations about the Walt Disney Company and why I think this is a buy. And yeah, I'm just happy you stick with me on my journey to financial freedom. And yeah, until the next time when I will stock analyze another stock out of my portfolio. But before we finish, I will ask you to subscribe, ring the notification bell, give me a thumbs up if you like the video. This helps my little channel so much. And it's also good for my motivation, of course. So thank you for that.